Okay, we're gonna get started. First of all, let's look at our calendar. We see we're at the end of May. May traditionally is a good month for the stock market, as we can see with one of the top three. We're going into the summer doldrums. We're at a period of time right now where there's no earnings report. Um, I think we're pretty much done with earnings reporting season. The next reporting is 3 months from now. So August. Okay. So so we don't expect a whole lot of returns for the next couple of months. You can see historically June, July, August, September haven't been very good. July's been pretty good. So keep that in mind. Let's look at so we do know that we had NVIDIA. We were waiting for NVIDIA to have their earnings. We had stellar earnings this week. And that um, caused a lot of the AI stocks to go up with it. We have a holiday on Monday. We've been mentioning anytime there's a holiday, people get excited and talk on the stock market rally. So we expected a good couple of days before and after the holiday. But we are overbought right now in the stock market. We can see we've been overbought for at least about a month now. I mean, look at that. The last time we were oversold was in the middle of April. So um, we are, what happens right now in the middle, what happens right now is we have some market participants that know we're oversold and like Citadel, they they buy some of the ones that perform the worst and sell the ones that perform the best. So we have a bunch of consolidation that's going to be happening. That's why we have for June, we have basically a very cautionary approach to the stock market. It's probably going to go down. Um, so all that being said, that's the big picture. We're done with earnings. The next earnings going to be in 3 months. So let's look at some of our talking points. S&P is basically unchanged since last week. We had the U.S. Treasuries go up 2%, 4% this week. So that caused the stock market to be very cautious in nature. So that's pretty much why we're unchanged. We our pattern of interest rates go interest rate yields for 10-year treasury going up, stock market going down is pretty consistent still. So we look at wait. So let me see. Okay, so we see that the market breadth is doing worse. It's actually less of the S&P 500 or above the moving averages. We have our themes from the beginning of the year is revert to the mean. Healthcare, telecom, financial energy, utilities, biotech did worse last year and will do better this year. And we have the talents of AI or maybe the new drugs or weight loss. Now let's look at okay. We know we're going into one of the worst months of the year. It's a very cautious time in June. There's no earnings reports. There's not a whole lot of news. It's mostly government reports. So that's why and people go on vacation during summer. So there's less volume. So there's less excitement, less things going on. We know towards the end of the year, we have a rally and we have a seasonally better time. So let's look at the S&P. So we've been overbought for at least a month now. We're halfway between our trend line. So um, so we're definitely at a spot where we're over our moving averages. You can see this purple line here. This is 100-day moving average. This is a 200-day moving average. So we're very comfortably above all moving averages from the S&P 500, and that's good for momentum purposes. Okay, we already mentioned that there is still an inverse correlation. Stock market is very, very sensitive to interest rates. So the higher the interest rates go, the less people are willing to pay for the S&P or for stocks in general. There's not a whole lot of change in our variables in the stock market. Oil is down a little bit, maybe 2%. Um, inflation is kind of going down a little bit, but there hasn't been anything really major to cause problems in the stock market or change the stock market trajectory. You can see that the dollar, this is the US dollar index, DXY. It's a measurement of the dollar against other currencies. You can see that the dollar is going up. Um, that means the dollar um, is stronger against other currencies. It has a lot to do with how the Fed is raising interest rates and or reducing interest rates. The goal is we've mentioned this often. Commodities are determined a lot. A lot of commodities are determined by the price of the dollar. So as the dollar tends to stronger dollar tends to have gold prices go lower. So as this dollar is going going up, the gold prices are going up too. So there's an correlation there, but that's because the price of gold is priced in dollars and oil and every other commodity. So okay, so our fear and greed index. We're getting more. It was greed last week. Now it's neutral. So we had the rising interest rates. As the interest rates go up, just, put that right here. As interest rates go up, people are more fearful in general in the stock market. So right now people are neutral in the stock market, and and the AAII survey is bullish, almost double bullish versus bear. So that's like a contrary indicator. Usually, whenever that happens, you try to do the opposite and not buy it right now. So we're overbought. Everyone's excited, and that's just the time when we're going into the summer solstice, where we're going to be sideways or down for the next couple of months. Okay, so if you have the VIX is probably the lowest in multi-year. That means the stock market is not pricing in any volatility. People are not afraid. They're not buying something. So they're complacent. That's usually well, that means that people are bullish right now. Very bullish. Let's look at our emotional chart. People are super excited. They can only see rosy things that they're buying, and I guess right now the new paradigm is AI and energy, and that's going to be our theme we're looking at. Possible things that can make the stock market crash. Some of them have been resolved a little bit. We have the China real estate prices. I heard China basically bailed out some of their housing sector. So there is this is basically resolving itself by China's realizing the problem and they're trying to bail out that industry. There's a lot of talk about China invading Taiwan. They're doing some military drills this week, with actual fighter jets going around Taiwan, like they're going to take it over. So that if they take over Taiwan semiconductor in some way, that will make the stock market go down a lot. And everyone's prepared for that right now. So that could be a major issue. Every major tech company counts on Taiwan semiconductor for a good portion of their chip manufacturing. So that would affect Apple, that would affect NVIDIA, that would affect Google, Amazon, every chip company. So we're keeping an eye on that. And Taiwan Semiconductor is actually trying to diversify into having their offices in other parts of the country world. And they also had they talked about a kill switch where if China invaded them this week, they would press a kill switch and they can't use any of their manufacturing in Taiwan. So that's a big problem for the stock market. It's waiting to happen. Um, let's hope it doesn't. Okay, now we were concerned about the AI stock bubble bursting, and we had excellent earnings throughout tech AI. So that is going to relieve a lot of the concerns of the bubble because these stocks are growing into their valuation. So that's very good. Um, one problem with interest rates in the United States, China is actually selling the United States debt. That if um, if large purchasers of the United States debt stop buying and start selling, that's going to make the U.S. debt go up, and then U.S. interest rates go up because it's the supply and demand growth. So if the interest rates for the treasuries go up like 10% or 15% like it was in the 1980s, then it's going to be a crisis because the United States already is in pays $1 trillion in debt every 100 days. And if it goes up more, then we might have to default on some of the U.S. debt. So we'll see what happens there. But um, these are some red flags. When you're investing, you got to keep in mind that there are black swans, and if any of these happen, you're going to have a spike in volatility. The stock market goes down, but at that time, you have to consider does this affect the long term of the stocks that I'm watching. Okay, so we've had a lot of the Magnificent Seven stocks report, and most of them, except for Tesla, have been very, very good. Um, and so great earnings is causing this issue not to be pronounced as we thought before. We still have problems with consumer debt. There's bankruptcies, and higher interest rates are causing a lot of stress in the personal finance world. So that could be a problem. And the that's about it. All right, so okay, let's look at our worst part. We did this at the beginning of the year. The worst performing sectors from last year: healthcare, energy, consumer staples, and utilities. And you can see they're doing. We're almost at the worst of first. Yeah, these are actually doing really good this year. Um, utilities, consumer staples, energy, healthcare. But IT and communication services continue their outperformance. So I happen to have about half of my portfolio or more in IT. No, 75% of my portfolio is in IT and communication services. Um, Primarily because they have higher growth rates. They're a lot more volatile, that sector. So looks like utilities are doing good this year, primarily because there's a lot of buzz that AI data centers are going to be needing a lot more energy. So we're going to go over that. Let's look at our theme for this year. The losers last year will be winners this year, winners of last year will be losers of this year. This didn't happen. The winners of last year are winners of this year too. AI revolution. Um, so the AI revolution, if we break it down, we have subsectors that are being affected by this. The building out of the data centers, the demand for electricity, the data centers require 10 times the energy of a normal, like a search for an AI search is 10 times more power hungry than a regular search. So we also have the cybersecurity need to secure the grid and to secure the data center. So we're adding these subsectors in utilities, such as electric companies are going to grow because there's a lot more demand for electricity due to AI. So that's why the utilities are catching a big match. So we're revising our theme. We still have weight loss drugs. We're still watching those go up around 30% a year. We're following that. Okay, so you can see the sector performance, this I actually this fidelity, here's the link right here. You can see that the best performing sectors, IT, the communication sectors, utilities, energy, the worst materials, consumer discretionary, and real estate. Um, primarily, I guess real estate's doing the worst because um, interest rates are staying stubbornly high, and that makes affordability lower for real estate. Um, so that sector is falling out of favor now. We'll be going over a real estate related company um, later on in an hour. It seems like whenever some sectors are out of favor, that's the time you start looking at them, see if they have those reasons. Um, okay, let's look at some of the market movers for today. Okay, we have stocks. Okay. Okay, so the best performing stocks right now are energy related. So the theme that we had was utilities outperforming. So the utilities were out of favor for quite a long time. Let's look at the utilities ETF. There it is. Okay, so it was out of favor for quite a while, and now it's actually um, in favor. And let's look at a lot of these top, like half of these stocks are energy related and um, involved with, in some way, the AI need for power. And we see we have a lot of, okay, and we also have, hey, these are AI related stocks. So our theme since the beginning of the year, AI is coming, keeps earthing like almost every day. Let's look at the worst performing stocks. We have Intuit. So now 8% unguided. Okay, drop in TurboTax fees. All right, so they had a TurboTax. They were sued by the government for offering free services, and then they had people having to pay. So they were sued for that. Now they've lost a lot of their free users, um, and the government's actually allowing you to file for free on their website now too. So that whole scam where they were charging people for free tax returns caused them to lose money. So they dropped on Q4 guidance. So even though they might have met their earnings estimates, if they guide their earnings in the next quarter down, that'll make the stock go down, regardless if they did really good on their earnings report. So it's always about the guidance and um, how they're going to do in the future, not how they did for this quarter. So we were watching the stock. We mentioned it about a month ago, and the stock, some of their catalysts took into it are they made their software so that you can't share it anymore. So more people had to buy their software. And you couldn't sell their software, on eBay. So that is a definite catalyst for people to buy more of their product. Um, but they had this problem with not as many free users, and the government is allowing people to buy for free. The government actually had to deal with these software manufacturers where if you offer free um, tax submissions, then the government won't allow you to submit. I mean, the government won't provide that free service. So now that's being undone, that's why they're down a little bit. Let's look at some more of the market movement. Hmm, with the healthcare companies on half of the healthcare, and that's all I can get to that. So we have a lot of energy companies, AI related, Supermicro is AI related, energy, NRG energy, they are AI related to the data centers. We're going to use a lot more energy and renewable energy. Okay, that's the thing for going up today. Things for the NASDAQ right now, we have a lot of AI related stocks. We have Qualcomm, AMD, Palo Alto. Remember I was saying that the cybersecurity stocks will be riding the AI tailwind because um, as we build out data centers, we're going to need to protect them against biases. So, so we're going to be watching right now. The cybersecurity stocks are pretty expensive, but we're going to watch them drop because they do drop quite regularly, like 10 or 20%, and then we can go look at it. What's in the works? Okay, we see Workday. These are hackers. Most of these are software related companies. Um, so Atlassian, they make Jira, Intuit, which makes software. Workday, they make software related. For human resources, and Adobe, they make service tax. All right, so that's okay. Let's look at those top stocks. Let's look at okay, 10-year is going down today. Um, Usually that's doing the swirling to the stock market. So anytime the stocks are going up or down on a day, you look at this, it's going down, and there's a chance the stock market's going to be going up. Let's look at the sector doing the best in the world. Um, Communication services up the most, technology. Okay. So when we had earnings reported on Wednesday, NVIDIA, when we reported the earnings Wednesday, they were better than expected. So we had for the rest of this week and maybe in the middle of next week, we're going to have all the AI related stocks kind of rallying. We also have the holiday coming up too. But then we start getting into June, so don't expect too much after like a week or so. All right, now let's take a few more talking points. Okay, Dan now fixed from the beginning of the year. Amazon's up 20%, that is up 34%. Texas Instruments is now 17% up. It took a while for that to revert to the mean. XBI is still down -5%, and the K-Web is up 10%. So far, Dan now has been very accurate, and he actually started his own company now, Analysis Investments. He was a CEO of a Sequoia fund for a long time. So we're going to keep watching what he does. Um, Here's a note from Charlie Bilio. He mentioned that all the tech stocks, all the big tech stocks are doing good this year, except for Apple and Tesla. You can see that NVIDIA is up 110% this year. That's pretty amazing. Okay, so this is a new story that's really, really concerning. China has been buying a lot of U.S. treasuries for ages. And now they're starting to reduce the number of U.S. related securities. And this could be they might be preparing for like a war with Taiwan. Because what's going to happen if they start attacking Taiwan, the U.S. is going to sanction all their money and take all of their reserves. So they're trying to get out of that. Everything's pointing to them taking over Taiwan. And if all this happens and China starts invading Taiwan, the stock market's going to go down like 20%. And it will lead to instability for all the tech companies, all of the AI related companies in go down 10% or more because they count on Taiwan for making all of their products. Taiwan semiconductor. So if this happens, the interest rates for the United States will go up because no one's buying U.S. debt. If that happens, if the yields go up, the U.S. spends a lot more service than debt, and the United States might have to default on their debt or something, and that could be like a crisis. So we're keeping an eye on this, and you have to be aware of these black swan issues if they ever happen, because um, yet you can't have too much um, invested in something that could um, well, you have to be very wary that something like this can happen. And if it does happen, you got to be ready to not do anything, and to understand the ramifications. So we're just like we're just watching these as possible things that may happen. The biggest news for this week was NVIDIA Games as Q1 results guidance top expectations. And they announced a 10-for-1 stock split. Their stock is around $1,000 now. And so they'll be like $100 a share after the split. So right around June 1st or June 6th or something like that, they're going to split the stock. There's a guy named John, Jensen Huang says we're basically in the next industrial revolution. So the internet, everyone's comparing AI to the internet. Back in 1995, and how AI is going to bring productivity gains and will change basically every profession. So the important thing to realize about 10-for-1 stock split is they do not make the company more valuable. It just splits the current price. It just makes the price a difference. I mean, splitting stock does not change the value of the stock. So, okay, so let's look at a chart on the video. You can see it's in an uptrend right now. It's right halfway between this top channel, part of the channel, and the bottom part of the channel. And it's super overbought. So right now, we're going to go over the financials on this. They haven't changed a whole lot. We've been watching this very closely, like a hawk, and you can see that their earnings have doubled, or scheduled to double from this year to next year, which is pretty amazing for this big of a company. So they're growing at 50% this year, but the analysts are basically saying that they're only going to be growing like 20% the next years after that. But no one really knows. Last year at this time, they were saying they're predicting 20% growth this year, but it turned out to be a lot more than that. So it seems like there's a lot of smart people saying this is first or second inning in a 9-inning AI game. Elon Musk says that every profession is going to be replaced by AI eventually. So it's a very disruptive technology. And there's an article by Jim Cramer recently. He said, "Don't trade NVIDIA after the blowout quarter. So trade me, don't sell it until the AI revolution runs on something else. And despite what you hear, nobody else comes close to these tips. You just have to own it. Don't trade it." So Jim Cramer, I don't know if you noticed, but he's been table pounding NVIDIA for 10 years. This is like his best call of all time. And he follows it like a hawk. He's had this president of NVIDIA on his show for 10 years. And he's on top of everything. He knows where everything's going, and he says with this is going to continue. That's interesting. Okay, so let's look at the financials for NVIDIA. You can see the PEG ratio according to Young Finance is 1.37. So they're 30% overvalued according to Young Finance. Their core PE is 42. They're growing at like 50%, maybe 40%, and their PE is 50, or PE is 42. Um, so that's very reasonable. They're almost fair value. The profit margin is 53, which is amazing. That's 5 times what we normally think is the minimum. The return on equity is 115, which is 10 times what we are looking for. Um, okay, so let's look at more of these financials on the video. This is a CFRA report. They say that fair value of NVIDIA is 853, overvalued by 10%, according to them. When we look at our earnings on that same report from CFRA, you can see that um, they're consistently going up, and they super jump. They jumped 10 times from 2023 to 24, which is amazing. So whenever you're looking for a growth stock, you want to make sure that there's a consistent growth over time. And so it seems to match a lot of the things we're looking for. Okay, so let's go back and okay, you can see from Morningstar, they think the fair value is right where it's at right now. So its price to fair value is like 1. They think it's fairly valued. And they said there's strong demand for their new chip. So, okay, there's a guy named Johnny Ives. He was first famous when he started discussing um, Apple back in 2012. He said Apple was going to be this great company, and no one believed in him. And now he's like a rock star in the analyst world for tech stocks. And he says the party's just getting started. Um, we're in like the first inning of a 9-inning game for AI. And he was in this link here. You can go to this link, and he had this pocket. He had a debate with a guy named Gerber, Ross Gerber, and Ross Gerber says NVIDIA is still in value, but Ross Gerber still has 10% of his money in this stuff. Um, okay, so okay, so um, anyways, what this I would watch this link if you could watch it. But basically, it outlines how much it outlines how much potential there is for NVIDIA. What Ross Gerber was saying was the industry of semiconductors, it's very cyclical. People double order, triple order, and then they don't order anything for a period of time. So if we look at NVIDIA over time, it has a huge up and huge down. It has 50% down, 20% up, 150% up. Um, let me okay. I'm going to pull up the video. Okay, so we're going to pull up the chart over time. So a cyclical company means it goes up and down with how the economy is doing. So as more money is spent in the economy, this company goes to a 1-to-1 correlation. But let's scale back a couple of years. Look how much this goes down. It went down from 942 down to 700. And so it has huge peaks and huge valleys because the there are times whenever people triple order and then they don't order anything. So you have to be willing to sit through those times when you're an investor in the stock like NVIDIA. So this isn't going to go up forever. Please don't grow through the sky. I thought it'd be interesting. They were doing this debate, and this guy Ross Gerber on this call, he said he runs a ETF called R. He runs a advisor shares Gerber Kawasaki ETF. So I looked at his top holdings, and he had 10% of his holdings in NVIDIA. So he is he is a bull. What he's doing is he's starting to sell some of NVIDIA because as a fiduciary um, thing to do, you can't really put too much in one stock. So he has to start selling some because we're overvalued right now. We've got to start scaling it back some. So I thought it'd be interesting seeing that the housing sector right now is like the worst performing sector in real estate. It'd be interesting to look at a stock like Lennar, which is 6% of his money in right now. The other stocks that he has are ones that we follow. A lot of big tech stocks here, and Novo Nordisk we're following, um, and Microsoft and NVIDIA. So we're not following Lennar. So let's take a look at wait, let's look at Lennar. Lennar is a home builder, and it's kind of a boring company. The home builders traditionally sell for a PE between 6 and 10. So they're very low growth, steady growth, but low growth related industries. Very similar to cars. Cars, car manufacturers, they sell for like a PE of 5 to 10 because you can't grow that much if you're in general, if you're a car company. So there's a lot to put into a car, and by the time you're paying everyone, you don't make a whole lot of profit. So Lennar, this is 6% of its money in Lennar. So now it's like an out of favor sector. Um, they have the tailwinds for this company are interest rates are going to be going down probably in the next year. Between now and this time next year, the interest rates most likely to be going down. Um, the problem with interest rates being so high right now is the lack of housing inventory. Homeowners aren't going to sell a house if they have a 3% interest, mortgage interest, locked in because they'd have to refinance at like 7% interest rate. So you have a lack of inventory until the interest rates go down again. So okay. Let's look at the financials for this stock. The market cap is $42 billion. We have a forward PE of 10, so it's a very low PE ratio. The profit margin of 11 and return on equity. These are all marginally within. We want a profit margin over 10 when we're looking for a stock, and a return on equity greater than 10. So that matches both of those. So it seems like it's growing at 10%, and its PEG ratio is about 1. So it's like a fairly valued stock. This would be one I put on my radar. It's not growing enough. It's growing 10%. But if there's a market sell-off and this goes down a lot, I would mark it as something I would buy for a long-term portfolio. The other stock that the guy mentioned on his top 10 was MGM Resort. I don't know anything about this industry at all, so I'm not coming into this as, these companies had a really hard time during COVID because they had no one could come to their place for a while. Now they're still recovering. One bad thing I see about this company, they're very inconsistent. You look at their earnings over time, you have negative earnings in 2014, another negative in 2020. It's it's not something that Warren Buffett will see as a consistent, steady demand company that regularly returns some certain amount. Okay, so fair value they say is 42, so it's around fairly valued right now according to Morningstar. No, according to CFRA. And looking at their earnings projections, they're growing. Their PE ratio is 10, and they're growing around 10. Their PE ratio is their PEG ratio is 1. So this isn't very exciting for me. I like to buy stock happen. So I keep this on my radar. You can see how inconsistent. You have negative earnings, negative earnings, negative earnings. This reminds me a lot of Boeing, how inconsistent it earns over time. So Warren Buffett would never I don't think he would be interested in a stock that's inconsistent like that. Um, so my summary for this stock is, we have tailwinds of legalized gambling across the United States. MGM, they're, they have, you can, and also on top of that, you have all these gambling being opened up in sports sports places like Yankees. You go to see the Yankees, you can actually bet in the stadium. So there's a lot of um, tailwinds for this company like that, and there's probably going to be some more legalization. Um, the inconsistent um, earnings for this is something I wouldn't be interested in because I don't want to see negative. In a company that's been around for 50 years, you figure they know how to make money over time consistently. Um, okay, that was a good little excursion. I wouldn't be interested in that one. Um, you can see that their forward PE is 15. That's not a whole lot. According to Yahoo Finance, they're 1.5 times overvalued. I 1.6 times. Their profit margin is half of what we're looking for. So that's not that doesn't match what we're looking for. And return on equity is 24, which is okay. So if this doesn't pass something I would be interested in. It doesn't have like an exciting tailwind for the story. Let's look at Amazon. Here's the charts that I pulled out that were interesting this week. Amazon, you can see it's a very consistent chart. It's going up in an uptrend. It's oversold. You can see that. This is one of the only stocks we're following right now that's oversold this week. And it's at the bottom of the channel. So either it breaks down below this, or most likely it's going to be going up here next. So that's one stock interesting. Nvidia is super overvalued, super overbought. So it's near the top of its trading range. So it looks like Nvidia is going to maybe hit the top of there and then go back down here during the June, July time frame. So be ready for that. Right, that was good. That was a nice little excursion. Let's look at our stochastics just for a tick. We do this every now and then. For the stock indices, everything is overbought. Every industry we're following is overbought. You can see it right there. Um, most of the stock indices are like halfway between overbought and oversold, and we're approaching one of the worst couple months of the year. So looks like we're gonna like maybe hit the top of all these and then start going down in the summertime. Um, Almost every one of these are similar. Um, as the US dollar goes up, the gold is going down. It seems. It's looking at the XLY. This is the consumer discretionary sector. It's one of the worst performing sectors this year. It's kind of stuck in its trading range. Um, the materials are doing pretty good. Still in that trend, and they're overbought, going down. And XLC is like one of the best performing sectors this year. It's overbought, starting to go down. And okay, this is utility for everyone over this. Um, it's definitely in an uptrend right now. If you scale out from let's scale out the XLU from the beginning of last year, you can see they're still underperforming. Okay, we're looking to the XLU going back 2 years, 5 years. Okay, we looked at 5 years. You can see we were in a downtrend right around February of this month was kind of the when it turned around, and now it's going back up. So it's going to have this AI tailwind for a while. They're overbought right now, so if you're interested in this sector, you have to wait until it goes back down to the bottom of its range. We start getting into some of those utilities that are going up today. Okay, so Okay, a piece of real estate. This is the energy sector is going in a downtrend, and the Brazil market is going in a downtrend. And it goes with gold. Let's look at the uranium. It continues to go up, and that's it. I think I ran out of time. Thank you very much for attending. I hope you had a good session today, and I'll see you next time.